Let's start with the gold prices, which are trading near 4-month highs after soft U.S. economic data raises questions about the recovery in the economy. Gold is trading at around 1338 on your screens, marginal decline coming in there. If you look at the Brent prices, those also have seen some declines coming in but are holding above 109 a barrel, drawing support from the data showing steep fall in crude stockpiles at the delivery point for the U.S. benchmark. It also has to do with the U.S. economic indicators, which have been slightly weaker, and they are keeping the gains in check as well. Let's get on board then. Vijay Bambani, who's author and CEO at bsplindia.com. Also joining us is Ashok Mittal, who is CEO MK Comtrade. Thank you, gentlemen. Ashok, let's start with you first. And what's your sense really coming in for the gold and silver prices? Up more than 10% for both of them. But at these current levels, how would you trade?
I think the momentum is quite clear, which is on the upside for gold and silver both. I think once we have crossed $1,300 on the international market in gold prices and $21 on silver, then there is further upside still possible in both the commodities. So we are expecting that gold should go somewhere around $1,360 or $1,370 on the international market. In Indian market, since we are now pretty above say 30,000 rupees, so buying on any dips or say close to 30,000 should be a good idea. And we will expect that another say 300-400 rupees upside momentum happen in gold. See, if you see primarily what is happening with the poor data which we have seen in US market, that is indicating that we might not see say further tapering happening in US QE. At the same time, we have also seen that investors are again coming back to the market, and SPDR holdings have been increasing gradually in the last say few weeks. So and we have not seen any change happening on the taxation or import duty in India as far as gold is concerned. At the same time, the hedgers or the speculators have increased their long in the international market as well. So I think there is a fair chance of gold and silver both going up. In case of silver, I think buying on dips should be a good idea, and we should see somewhere around say 49,500 and maybe close to 50,000 rupees.
50,000 expectation on silver. Vijay, what's your sense? How bullish are you on that commodity?
Manisha, in relative comparative terms, I remain optimistic, positively biased on silver as compared to gold, because I do feel 2014 onwards, the kind of outperformance that you saw in silver from 2008 to 2011 is likely to return. Now, as far as levels are concerned, I think at this point in time, 44,000 has now become a fairly solid support in the absolute near term. On the upsides, I would expect 48,600 as the immediate hurdle, and once that's overcome, probably 49,500 to 50,000 may also be seen.
Well, that of course is the price view coming in for the precious metal space, but remember it has been 7 months since Indian sector has seen curbs coming in for them, the 10% import duty and the 80-20 rule as well. All the Indian Gems and Jewelry Associations today had gone to Delhi. Let's talk to one of them, and Harish Soni, chairman of All India Gems and Jewelry Trade Federation, now joins us on the show. Harish, hi, welcome. There is huge losses that the industry of course is making because of these curbs. What are you telling the government on that front?
We request government to reduce import duty to avoid smuggling and to abolish 80-20 to come out with a high premium. And there are a lot of procedural hurdles. Even though exporters are also facing problems, they are also not getting gold in every centers. Every place there are different kind of procedures are following. So in that case, we are just requesting government that right now industry really wants that duty should be decreased and 80-20 should be abolished, because 80-20 has resulted very negative.
Harish, what kind of a duty cut are you expecting from the current 10%?
We are just saying that it should come down to 10% to 2% to avoid smuggling activities.
Harish, there is limited time for you because soon the code of conduct for elections would start coming in, and then it would be impossible for the government to do any changes for the industry here. Are there any more steps, another alternate plan that you have?
See, basically, we have been representing our industry to the government for all these issues. But unfortunately, this single-handedly, this industry has been targeted, and we would like to say that gold is not the only culprit for catch situation. So we are requesting government that at least there should be relaxation for import duty and abolition of 80-20 rule, so that industry will have relief, that at least a survival is a problem right now. Industry is dying. So in that case, we would like to request government that there should be some relief from the government. That is what we are expecting right now.
Final question to you, Harish, before we let you go. What is the scope of industry right now? Because the World Gold Council feels that the Indian imports or rather Indian consumption will continue to be on the higher side. In that sense, how is the industry looking at those numbers?
First of all, manufacturing sector are badly affected because of the policies. Retail sector, as I told you, that neighboring countries are getting more business. This time, even we are not getting NRI business also. So overall, I would say that compared to last year, 25 to 30% market will be down, and this industry will face major problems for even revenue as well.
All right, Mr. Soni, we'll let you go at that. Thank you so much for joining, and we of course hope that the government will move some decision on those curbs in the next few days there. Well, that's about the gold and silver prices in price sense and policy as well. But let's take a look at the energy space where we have seen some profit taking coming in. Ashok, what's your sense now for the crude oil prices for the trading today?
Before I speak about crude, I would like to mention about gold. So if your market is expecting some kind of cut happening, that effectively means the spread between gold hedge contract and MCX gold contract might come down. So it will be, I think, good idea to make a pair strategy there. You can, in fact, buy gold hedge on NCDX and sell gold contract on NCX for maybe next, say, 7 to 10 days. And if there is any cut in the import duty, then that gap will actually come down. Coming to the crude oil, I think technically we are still above, say, $100. So we will expect upside to continue in NYMEX crude oil with a target of $103 and $105. So in MCX, buying 6,300 should close to that should be a good idea with a maybe just $1 stop loss, that is about 60 rupees, and a target of say $2 to $3 upside, that will be around say 150 to 200 rupees. I think that's a good risk ratio should be done, because we see a lot of unrest happening in the Middle East area, or we see some kind of a supply constraint also happening, and still there is a lot of heating demand there. So I think this will still a buy as far as energy is concerned.
Vijay, how are you looking at the natural gas prices? Down more than 17% in 2 days, and today of course we've seen some bit of a consolidation coming in, but at these levels how would you trade?
Manisha, I think closer to 270 rupees natural gas might see some stability or even emergence of a little bit of sporadic buying. So 270 to maybe even relax it to 275 levels. I think there might be a technical bounce back from there, which could possibly take the prices to 295 to 300 band. So given another 10 rupee decline, I don't really mind taking a high risk punt on the long side in very small quantities.
Vijay, also how would you look at the base metal space? Because there's been no positive data for that space, but we have seen some opportunity buying in most of the metals trading in positive today.
At this point in time, Manisha, I would still categorize it as a technical pullback, because there is no level of exuberance as such. These are indications of shorts that had been built up, getting squared up, and there is also this factor about a broader based technical pullback across the asset classes. So I would still not read too much into it. And I would still stay away from shorts, though. If I was to short, I would wait for 3 to 4% advances from here before venturing out any shorts. So at this point in time, I'm sitting on the fence and doing nothing in industrial metals.
Ashok, how are you looking at this sector? Are you bullish, bearish for the near term and the long term here?
I think both data from China as well as US are not really supporting positive side as far as base metals are concerned, because Chinese data is not good. We are not seeing demand happening there, as well as US housing data in fact is not really good, so they are not supportive of higher copper prices. We expect the prices to correct further, so any upticks actually should be used to sell. We expect copper 3-month should be say 7,000, below 7,000 in fact, so any uptick of 2-3 rupees in copper from current level should be used to sell, and then we see maybe 5 to 7 rupees downside happening in copper.
Okay, so near term some bearishness continuing into the base metal sector, but let's take a look at the agro space now, where we have seen more declines than gains come in the trade today. Take a look at the potato prices, where there has been a decline of nearly 2% for the front month. There has also been decline for most of those spices in the markets, namely turmeric and cardamom have seen some decline coming in. But when it comes to chana, that has been a choppy trade today, but the spot markets were trading in with some gains in the market. On your screens, nearly 4% up coming in for the futures as well. Vijay, how would you look at the chana prices, the kind of spot that we have seen, and perhaps that comes in from the fact that MP has seen rains overnight and there is some issue about the crop there?
Manisha, I'm pretty pleased because for a very long time now I've been talking about chana hitting 3,375 levels by end of April. Now from 3,000 levels you're approaching 3,200, so I think you're halfway there to the target. I would not really be surprised to see another 150 to 200 rupee rally from here in the coming 8 to 10 weeks time frame, and I would remain bullish on chana. If I was to get chana again at 3,100 or 3,125 levels, I think it's time to buy chana.
Well, just remembering on a conversation that I had with the trader in the morning, there has been immense rain in MP, and perhaps the MP crop itself might go down by 20 to 25% is the initial estimates, and that perhaps working its way onto the prices. And Vijay, as you have been pointing out, yes, on the charts as well, it has been looking bullish. But also on potato, how is your outlook now?
Manisha, here again, potatoes moving in a very, very predictable manner. I talked about how the prices in the financial futures market are actually reflecting exuberance. It's not even optimism, it's gone far beyond. And the prompt month futures, which are down a little under 1.75%, does not reflect the true story of what is happening in July and August. Those series have almost hit 3% down. So what is happening is a cost of carry of over 50% annualized has been built into the rollover costs and the cost differentials, which is unsustainable. And I think that is what is likely to lead to unraveling of long positions if prices were to decline below the 1140 odd levels in the March month futures. It will have a cascading effect on July and August series also. I would seek short selling opportunities at higher levels. If I see another 25 rupee upthrust, I would be happy to short potatoes all over again.
Vijay, also, what is the kind of impact that you seem to be getting from these differential transaction charges? Because MCX has come out with a release today that they would cut the agri transaction charges by nearly 70%. Do you think that's another thing that can actually take the trade higher?
I hope so, Manisha. I think these are positive kind of boosters for the markets. But what you do need to see that the interest and awareness in agricultural markets need to be stepped up. I think it's a very challenging, very exciting segment to be in, and I would welcome FMC's move to cut charges by 70-75%. I think it goes a long way in kind of getting the short-term traders, especially the day traders, to participate more and more in the agri-futures market, thereby reducing impact costs for real investors.
Another space that also seems to be buzzing today is the edible oil space, especially the soybean price is up nearly 3%. That's another area that had been consolidating, but this huge run today itself, how are you reading it on the charts?
Manisha, there is this factor of Brazil facing supply side constraints, and you're likely to see some more headroom on the upside for crude oil. I'm talking of WTI crude here, which would have a trickle-down effect on both soya oil as well as crude palm oil. I think crude palm oil will start to get into overbought situation above the 600, 605 odd levels. I would be happy to short there. I think refined soya oil also, give it another 2-2.5%, will start getting into overheated zone. I'm not saying that it will reverse immediately from there because things do take a while to basically top out. But at 740-45 odd levels, soya oil would attract short selling interest.
All right, so that's the view really coming in for the agro commodities. Much gains than losses for at least the essential commodities there. So the gainers clearly have been the pulses and the edible oil space.